All right, all my devils, how we doing out there? Here we are on Friday, the 6th of November. How about that Bitcoin? I can't say I'm terribly shocked, but certainly it's really nice to see what you've envisioned happening right before your eyes. Now we've done a couple of things here with this last move here. We've eliminated some, I think, some bearish possibilities here. So there was always the if you looked at the longer term, always the possibility that there might have been some sort of a triangle going in here. Well, with the decisive break of this pivot here, I think we can now lean in a bit more into the idea that we did indeed have an impulse into this pivot here. We can, just for the sake of simplicity, 3 down into our 2, mighty deep. All right, but now, so where are we in the context of where we might be headed if this is indeed going to play as a 3? Well, this whole move has been, as is often the case with Bitcoin, the Elliott has been a bit elusive here because we have not had any decent retracements here. I mean, really, zoom in here a little bit. The only 2 significant retracements that we've had throughout this entire move off of the COVID low. Oh, here, let's use an arrow here. So this right here was one of them. That's the first one. And then this would be the second one right here. Those are the 2 biggest retracements we've had all along the way. Now, there's a couple of things to note here. So having identified those, let's just take a look at the measure. So if we're just pulling from low to high, right in front of that retracement. So here's the first one we get. Well, no, we don't even make the 38. We're halfway between the 23 and the 38. Right, interesting. Now, if I do the same thing up here, right, swing low to swing high, the next retracement halfway between the 23 and the 38. So these have been remarkably shallow retracements, right, demonstrating the strength of the bull. So to get an Elliott count on it has always been a little tricky because you're where's the 2? Right, you're looking for a 50, and we don't have, closest we've got is about a 30. Or not even that, right? I mean, just barely between 23 and 38. So we're barely getting any kind of retracement here. Now, the other thing that's worth noting here in terms of anticipation of what might come next. Oh, let's see. I got to scrunch back a little bit. Let's get reframed. Okay, so every one of these retracements, and pardon me, let me rephrase. The 2 little retracements that we got were both retracements to structure relative to the huge move down from the prior all-time high. So as can be noted here, this first little retrace, right here, well, we're tapping that prior pivot high. That prior resistance gave us the support. It's the exact same thing here, right? So from this pivot here, as we come down, well, look, we're tapping this over here, right? And you could make a case here, we're tapping all of this structure here, came down to get checked, right? It's tap and go, right? It's down, tap and go, right? Very short-lived. Look how quickly they were rejected. It was just an opportunity for buyers, right? So down, oh, you're going to give me an opportunity to buy it? Up we go. You're going to give me another opportunity here, right at structure? Thank you very much. Right, so I had this for I can't even remember how long, 2, 3, 4 months when we had this little section here was the only decent retracement got, and that was the last buy we made here. So there's been, other than shorter term things out here on the long term swing trading, there's been very little opportunity. This is really your last opportunity to get on board at the larger degree here, where you could see an obvious retracement. But very orderly. Now, you say that, now look at the ramp that we've had here. So if we were to come back and retrace, well, based on everything we just went through there, where would you anticipate that retrace would come? Well, it sure looks to me like it would be right here. And you can see I have an alert on it, and I've had that for some time here because I wasn't expecting us to go that far that fast. But 12, here we're sitting at, this is 12.2, call it, which would be a retrace back to this prior structure, just as this was a retrace to this structure and this was a retrace. So you get my point. If we're going to come back. Now, we may never see that again for all we know, right? So it would be somewhat surprising if we didn't get a retrace, but if we're off to the races here and we're not looking back, this may be just a distant memory of what we had hoped we might see. And you'll note here that if we were to do that, right, if we look at how nicely this channel has got it framed, right, if we were to get that, whoa, That'd be a gift from the Bitcoin gods. Although, crypto Twitter would be in a panic that we'd pull back that far, I would see it as just a gift. That's me. So I'm going to leave that alert on should we get any sort of a pullback here. And even some of this, right, I'd want to know, right, if we're just going to pull back to this structure, although I'd probably do it that way. So rather than the wicks, I'd get that body here and see how that would tie in here. But so the channel is immaculate, right? Just I'm to the tick here, right on the edge of these pivots here, and I've gone here right to the edge of this pivot, and look how we line up there. Now, of course, all of you that have been following this for some time know that additionally the pitchfork here that I've had on since our excuse me, our low in our 18 low swing up, and then our COVID low. Been there for a long time, right? A lot of people, you look at it and you go, well, it's mighty deep, but as long as that pivot holds, 80% odds, right? I've said that so many times here. It's amazing that I don't see pitchforks on every single chart posted anywhere. Amazingly, remains the most underused technical tool on anybody's platform, bar none. Yet there it is. Yet again, out here on a 3-day of Bitcoin, right? Boom, there's your 80%. So I'd encourage you to start using median lines if you're not already. So that said, so having hit this, now trading principle number 3, if we're not going to pivot right on the median line, which often we will, if we're not going to pivot, it's very likely we could hover around this here as the market digests this. Now nothing says we have to do that. I mean, we could just roll up to that 3 easily. But right now, as we stall here, and we're a little hesitation here, which we'll see on the smaller time frames. But right now, just I want to marvel at that geometry here as we bag the median line in the perfect geometry of the center line here is just really interesting. So before we get off of this, there's a couple of things to note here. So I think since these have all kind of made my point here, we can take all of this off, right? So if that's getting tested again, well, we'll know to go look for those as well. Right now, it's dealing with the resistance up here. Now, this is a straight shot, and again, there's been very little retracement. So, careful about the idea that we're just going to go. Well, of course, I know. I say that, and then you look to your left, right? So certainly it's possible. Look at... let's use this one, right? This one to this one. Well, there's 618 of it here on this one. Let's do the same thing over here in terms of what they're doing, the swing high to this one. Well, I had this drawn up here, but we'll just redraw it. If I go swing, if that's my 1, and if that's my 2, well, you know where I'm looking for the 3. Right now, are we going to get it here? Probably not, right? But as time passes, we could. But as time passes here, the passage of time, as we angle towards that put us around first of the year. But that's putting us at a new all-time high, 21,521. If we're going to go get that third, now it's hard to envision how we get there without a retracement. But right now, this is your best bet for a 2, based on what we can see here. This is the highest odds for our 2 because it's the deepest retracement we got along the way, and we can count out a clear impulse here. It's not the prettiest impulse ever because there's no 2 in it, right? So you got to just go with what you've got to work with here. Here's my deepest retracement. So if I had to pick one, I'm inclined to go 1, 2. Well, that's not likely to be 3. So just in the broader, simple Elliott, if that's 1, 2, and we're approaching a top up here, right, which we'll break into that smaller count. But if we are approaching even a little pause here, well, that's not going to be 3, which implies that if we did get a pullback, I mean, this is wildly bullish. Wildly bullish. I mean, from an Elliott perspective, if we're just using swing relationships. So this pivot, right, so we're through the 100, right, clearly. So we have a contender for the 3rd. Next up here, I'm just using the little structure here from the prior pivots because this was all tested, so there's no reason to think that this wouldn't get tested as well. There's stops there, right? So if we're gonna continue to carry on here, these are potential reaction points. They're nothing more than that. Nothing says they have to stop there. If anything, if there are stops still on the other side of that could be fuel to kick it higher. But note here, we'd be coming up to the 127, 138 window, right? It's second most common for a 3. So this wouldn't be shocking, but I don't think that's what's coming based on the fact of the subdivision, what's happening here. So I think we can move off of here. I think the last thing to look at here is the range expansion, or the wolf range, as I call it, which is kind of interesting. So if we Oh, shit, I gotta find it here. Okay, so I think it's right here. Okay, so here, let me put this on here because this is interesting. So if I, now here, I'm taking the first, let me zoom in there here. So now I can, at a larger degree, if I'm looking from the swing low, before I go I get any sort of a retracement here. So I go up, 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 up. Here's my pivot. So if I pull back out and just look at that as, okay, that's as far as I went before I had any sort of a decent retrace. Well, look what this is doing for me. Well, here's the, and we've looked at this a few times, but I got here, there's a couple of different ways you could work this, but out here on the larger degree, I want to work with the largest swing that I've got. So here's my 100, right here, it's to the tick. Now, note here, if I were to, if I hide that, where did I put it now? Here, if I hide it. So look what's right there, and right here, so let me put that back on. So right here where we had a little test here of this prior pivot. So that's my 100. Here's my 200. Here's my 300, 400. So if I look at this here and go, okay, well, let me unlock that. Okay, so now this has become my 100. So I want to double the range. So I want to pull up to my 100 here like this and get right on there. Now, look where that puts my next 100. So hopefully that makes sense here, what we're doing. So all we're doing is just taking this range and then doubling the range, right? So that's, if we get it right on that, right? So that's the next target here. So for range expansion, and if we get that, then we're looking for this one, right? We know this is an algo. It's easy to spot. It's an algo that we've identified repeatedly here. We see it in Bitcoin all the time. So this target up here, that's new of course, new all-time high. So just here would be kind of interesting to get this range to double. Interesting. We'll have to see if it gets there. Now we're going to have to get on the other side of the channel. We might be doubling the channel. That is the draw of the median line. So if we're going to just carry on here, going up to get the 200 here, well, we don't have to get it here, but at some point that's going to be in play. So let's pull this back off. So we've got a couple of different things that are kind of interesting the way they're lining up here. Now we got to look at, see if the Elliott count is any help to us in terms of where we might be in this last kick. So let's go, but just so you can see my roadmap here, I think it's 1, 2. Here's my 1, 6, 1, 8. So no reason not to use that. So I'm looking for this 3, 4, 5, right, to complete the impulse. And in my view, what we'd be doing there is, we don't. Let one thing at a time. So if we complete that impulse, I suppose it's worth going out to go to log scale. Let me do this and let's look at this in context. Okay, so if this is 1, 2, 3, 4, well, you could make an argument that we'd be finishing out there. So a lot of it is if you're counting this as a 1, 2, or if this is 1, 2, 1, 2, 3, 4, 5 would be topping the 3. So this can be interpreted a couple of different ways because you can go 1, 2, 3, 4, 5, 2, 3, 4, 5. There's a couple of different ways you can do this. So it's a bit of a crapshoot, but if you wanted to be ultra, okay, let's simplify. 1, 2, now this is log scale, right? So it's going to be deceptive to your eye. 3, you can make a case. We'd be putting in the completed impulse off of the absolute low. So something to keep in mind. Do I think that's going to happen? No, I don't. All right, so I think we completed here. This is the 2, and now we've gone into our 3 here. So this continuing higher, I'd have 1, 2. Looking for the 3, 4, 5. That'd be my view long term, but long-term Elliott forecast, right? It's like projecting the weather for the next 3 years. Right? It's hard to do, right? So careful of long-term Elliott counts because so much can change along the way. But right now, what I can see is off of the low. This is looking like a 1, 2, 3. Right? We're not there yet, but if we're going to continue to rally higher here, which I think we will, I think we can eliminate some of the candidates here, and then the 4, 5 looks probable. Nothing more than that. Not inevitable, just probable. All right, so let's enough on that. Let's go look at the countdown on a lower time frame here. So let me pull back out here. So from that, and we can probably take the median line or just hide it. So here's our COVID low. So this being the deepest retracement. Now we're just looking at this on a 3-day. So here's that retracement where it looks a little more significant here. 1, 2, 3, 4, It's the deepest retracement. So it's our best candidate for a 2, despite the fact that it's so shallow. Excuse me. So let me hide this just so it's out of our way here on the chart. Let's lock it and hide it. All right, so coming off the COVID low, if this is our completed impulse and this is our skinny little, it's clearly a 3, if that's our ABC. Now, shooting up from that, what are we doing here? Well, 1, 2, not likely to be the 3. So let's dig in there a little more. Let's go to that 2 hour. Okay, so here's our 1, 2, our proposed 1, 2. Now this is subdivided repeatedly as it climbs higher. So Elliott traders know this. As we're moving higher, well, if we get a completed impulse, well, we got to tuck that into the context of the prior impulse. So off of the, well, I guess our lows. Well, no, this is the lowest low here. So we're gonna have to go 1, 2, 3, 4, 5 into the 1, A, B, C into the 2, 1, 2. I haven't. Oh shit! I should probably do it here. So we'd get 1, 2, 3, 4, 5. Let's get that in, put it in white here. So we've got all the subdivision here. So this gives us nice little ABC, big impulse, ABC, little running flat here up into the 5. So the larger degree here is this. All right, we got a pretty kicking impulse here. So we've gone 3, 4. Now, are we done? Are we done? Just looking at that, all right, it's not bad looking. All right, it looks like we could have an extension because looks like there's more to come here. Not guaranteed, but this is consolidating. You can see it in the volume profile, right? So we're building a little base here. So potentially this is reaccumulation before we kick higher. This has got a little interesting. This has been challenging here to get a clear count on this, and it's changed a couple of times as the market reveals. I mean, there was a case that we could have done something like this, that we were starting the 3 and we had deeper retracement before going, but not to be. So coming out of this, doesn't look like we're done. Let's go to a 30 and take a look at that. Let's see if that'll give us good insight here. Let me open this up. Okay, so here's the ABC into our 4, 1, 2. I got another impulse here. I got to deal with it, right? So 1, 2, 1, 2, 3, 4, 5. Looks like I'm completing the 3. Now that's just beyond the 2, 6, 1, 8 of the proposed 1, 2. So that's quite the kick in a third. Oh, pardon me. So we'd have to do it this way. It's this one. 1, 2. All right, so here being the 3, if we're pushing for the 4 to the 5, it's not tick perfect, but this 3 is so huge, it's well beyond the 2, 6, 1, 8 here. It's well beyond. God damn it, trading view. God, that's the most annoying feature. Okay, let's try it again. Off to the side. Right, so we're so far beyond the 2, 6, 1, 8. So with here now, if that's going to be our 4, if that's going to be our 4, you start looking for candidates up here for a 5. Well, there's 2, 6, 1, 8, the length of this little 1. Now this if we keep rolling here, there may be some relabeling going on in here, but right now I can go 1, 2, 1, 2, 3. I know it's skinny for the 4, right? 3, 4. Now this is, we're testing that support. Or excuse me, we're testing the resistance here as the support. Looks very 4-ish to me. Now we could fall over here, and I don't know that we're done. But this looks like perhaps we're a little chop here, and there's one more kick to come out of this. So I wouldn't be sure. Well, I think once in my life I've shorted Bitcoin. I almost never short Bitcoin for just this reason. But that said, here, and because I'm a long-term bull, a crypto bull, I think this is a reasonable expectation to come out of this consolidation. Now you can see it a little bit more here. So the market is building, potentially now, it's just potential, it's building that base here. Let's go back to an hourly. So you can see all of this, right? All of this is coming out of all of this congestion here as we just hovered here and dealt with this before breaking higher. I'd really do it that way. So all of this, right, we just built this base right here. Now, can we do the same thing here? Now, it may not be to that degree, but all of this base, and then we launch from that. So even if you looked at it this way, it said just from the low of the base, let's use the pivot high, and then the low here. What do we do? 2618. Now, I'm just taking the length of the consolidation period here and projecting up. Not so much an Elliott count, although damn near fit one in there. This is tricky up here. 1, 2, looks like that's the 5. You have to go 4, and then you got a little 5 here to give you the 3 of that count. A, B, C here. Now again, 1, 2, 1, 2, because you can't leave that impulse unaccounted for. You got to deal with it. It's right there, clear as a bell. 1, 2, 1, 2, right? But it actually accommodates what we're doing here, because I can finish another impulse here. So are we done here? Well, it's mighty skinny. But if this is the 2, now take note here. All right, this is what comedians call a callback, right? So if that's the 2 and that's the 3, here's the 23. If we're going to go a little deeper, where are we looking for that? Halfway between the 23 and the 38. If we're going to come back down, well, so why would I pick that, right? It's because of all those major retracements we just looked at, right, between the 23 and the 38. So that seems to be what the market's habit is. Now we could draw this a little differently. We'll see. We could use a channel here. Do it this way. I don't want to extend that far. Just a nice little channel here. I don't know where that 4 is going to finish, but I'm kind of keeping my eyes on it. There's a degree of risk here after this much. I moved this far this fast with no support here. Now we're building a little base here, so if we start to break higher, that's very tradable. But you should be anticipating that we're likely, again, it's all just probabilities, we're likely to be completing something here. Now, does that mean the top? No, not necessarily, right? But something, if going off of this low here before the ramp here, we're likely approaching the top of something here. And now as to how we label it. Now looking here, now this is a good example of how this can be deceptive here. So we had the declining momentum here right before the ramp. So all the way, we got almost to 0 here. The RSI is declining. Volume was declining. Everything's declining, and then boom, you get the explosion, and all of that just, really was just a setup for the sell for the high. So if I were to do this and put that right on that low, right as it weakened. Now let's just look in there a little bit and see what was happening. So that was just as it was coming down, putting in the 2 at this degree. Then we launch. All right, and it's that launch that gives us this. So since that's the height, the peak of the Elliott oscillator here, which is the 534. So if at our peak here now, you'd be much more inclined to think that's the 3, which is how it's currently labeled. So the implication as we soften here and retrace into the 4, just like these are candidates for 4s or 2s, as we come down here, but ideally in traditional Elliott with an Elliott oscillator here, you'd see the 4 get to 0, as these did. Right? You don't want it to go too far. That's what this little line is. But the ideal scenario here, and then you'd get a little divergence like we got here. Right, this is all right back. Now, if we're going to hold 0 here and go back up again, it makes sense. So this can be, you got to be careful with this, because you could go to the 30-minute and say, oh, we already made it. All right, we made 0 on the 60. So if you're going to react off of that, the lesson there is if you're going to say, hey, it made it on the 30, so I'm going to take that, well, you got to trade off the 30. Because you can't go trade off the hourly and say, oh, well, that's inconvenient, it didn't get there, and then go to the 30. Oh, well, I like it on the 30. Well, if you're going to trade on the 30, if you're going to make a trading decision based on the 30, then you keep trading the 30. Not that you don't go look at the longer time frames, but if this is the trading size that you use to enter the market, stay on that for your trading chart. Right, it's easy to do, because you want to rationalize. If it starts to soften here, right, we get a deeper retracement. What can you imagine the average? Well, let me rephrase. The newer trader might be inclined to do. Well, it didn't get there on the 60, so I'll just stay with my long here. I'd give that a little more room, because we didn't do it on the 60. But you made the trading decision off the 30. A common mistake people make. If you enter here, you ride out the trade there. All right, I don't know that we are coming down here, but we can certainly understand how it's vulnerable. And now here at a 30-minute, here's really your, this is your little pocket you've got here. You can work with this. It's all you got. You got that little retrace there. It's already been tested from above. Little test. Now is that the 4? Going into the weekend, it's always a little dicey to put something on a Friday afternoon, but it's certainly there. But again, I come back to, because we went so far so fast, it's vulnerable to a retrace. It certainly is. Or profit taking, you think of that way. People that are not long-term hodlers just say, whoa, look what I caught. The temptation to take profit there is, I saw a great quote from Mike Novogratz. Many of you probably follow, huge Uber bull. He's talking about Tudor Jones described it as the pain of the gain, which I loved that. The idea that the hardest part when you're in profit is to keep your fucking hands away from your mouse. It's very hard to do, because human nature is you want to pounce on that profit, particularly if it's substantial. Because if you caught this with size or leverage, the pain of the gain. That's a great turn of phrase. Well, from one of the great traders of all time, he would know. All right, so there you go. So that's, I don't know if there's much else to add here other than this consolidation here certainly lends itself to one more kick. But I remind you that if we kick up here, we're finishing something. So you would anticipate that if here, and we'll just use the algo target here as reasonable, that looks like decent symmetry into that count. If we complete up here, you got to at least be expecting from that, if nothing else. So the first thing you would do is just say, well, if we're going to retrace from that, from a completed impulse, where am I going to look for some opportunity? Well, we'll look where the divot is in the volume profile, right where you'd look for that between the 50 and the 618. So I'd be watching for that. If you got that opportunity, if you got something like that, you could take it with that as your spread. So you got to do the math on how much risk you can afford to take there, right? Don't. I know it's Bitcoin and you want to be as long as you possibly can, but don't over leverage yourself so that you're vulnerable here to liquidation or whatever the hell might be going on here. You don't need to. If you're buying here, if you're buying, and particularly if you're going to trade it with leverage, you got to put a fucking stop on it. You just have to. One of our team members in our FEMEX competition, he's going to be pissed at me for mentioning this, was so convinced that the market was going to come down that he took it with leverage without a stop. Right? That's a lesson. Hopefully that's a lesson you never repeat again. Right? No stop. There's just no reason not to do it, unless the intention is not to be swing trading. Your intention is to accumulate. Well, then, you're willing to accept the drawdown. You've made that deal with yourself before you go into the trade. You're just in for the long run, so a stop is not appropriate. But if you're trading with leverage, it's just there should be no time that you enter the market where a stop isn't the first thing that you're asking yourself. Because really, see, this is a bit of a retail mistake that's made so often. The retail trader, or let me rephrase that. The newer trader is focused on how much they can make if they're right. The professional trader's always focused on how much they can lose if they're wrong. Always. First question, well, where am I wrong? Where am I wrong? Okay, can I afford that based on the size I'm considering putting on? Right, per my account size and my risk tolerance and my trading plan, because you got a trading plan, right? What can I afford? Right? This new trader, oh God, look how much I could make if that hits. Pro, oh God, look how much I could lose if I'm wrong. Look how much I could lose if I'm wrong. Right? They don't make that mistake ever, or they wouldn't be professional traders, or they wouldn't be for long. Right? Focus always first. That's why the stop should be attached to your entry. So there's no possibility you go, well, fuck, I'll buy it. I'll throw a stop on there later if I see it soften. The second you do that, the market will go up. Right? I'll grab it as soon as I see it weaken. And I say that from so much experience because that's the mistake. Right? That's why I could almost guarantee that he was going to be in trouble. Because the second you enter the market without a stop, you've made the mistake, right? And you can learn this from me, or you can learn this from the most expensive education you'll get anywhere, and that's from the market. The market has an unbelievable capacity to punish mistakes. You enter the market without a stop, you are going to pay the price for that. It may not be this trade, it may not be 3 trades from now, but at some point you're going to repeat that mistake and you're going to get crushed. One way or another, the market will teach you that lesson. There should be, I never go into the market without a stop. It's attached to my order. I wouldn't even consider buying something, especially in crypto. if I'm trading with leverage, to go in without a stop, fuck, that's a death wish. Why would you do that? No reason to. Okay, all right, that's probably enough. I'll be back. Got to talk about the S&P trade. All right, where I certainly got that one wrong. So we'll be back to clean that up. I'm still in the trade. I'll explain to you why, right, per the options trade. So we'll be back to look at that. And I think that's all there is to add here. I think this is for a short-term swing trader here. There's a trade here. I mean, wait, shit, that'd take you up to 16.5. But, where's your stop here? If you're buying it here, is your premise that the 4 is in? Well, I'd want to see something like this. I'd sure want to see a break of that trend line before I went. Well, there's probably, I take them here. You've got this as well here. Looks like from this pivot, you might have a measured move here as well. All right, looks like you would. All right, so let's get this one off. So this right here, so let's get that one off too. Okay, so swing low, swing high. So we got a little ABC here. Now, does that look like a 1? Definitely not. A, B, looks to me like you might have this. Well, you got 3 down. You got 3 here. So either you're going to get you couldn't have a flat. Oh, shit, come here. You couldn't have a flat. It's not far enough. But you certainly could have a WXY. So don't, just assume that we're off to the moon without a retrace, right? Even I say that. Even though I just went through how rarely we've seen any significant retrace. Now down here on a 30-minute, different ball game, right? We could get a much deeper retracement here that might show just as a blip on the daily or the 3-day. But out here, I got 3 followed by 3. That does not look like an impulse. So it does not look to me like this is done. Looks to me like this is WXY going in. Right? So again, we're just to what we drew here. Where's the high volume? Well, you get it right here. What's below that? Air. Right? So you could easily fall back to this. Now you're back at 13 and you're back to this. Right? So that's a long fall, right? If you're falling down here, you don't need to take that fall. You don't need to. Right? Use the Elliott here. The Elliott's helping here. Even a 15-minute. ABC, ABC. That does not look like we're done here because that doesn't look like a great start to a kickoff into the 5. Looks to me like, this 4 is yet to be in. W, X. Maybe that's A, B, C, maybe. Right? You have golden, Vegas wave would be right there. You'd be right on the edge of where there is some support because it stalled right here for a minute before we kicked in that final push that broke. What, did we break 15 here? Yeah, this is the first break of 15. This is what got us up to 16. Careful here. Careful. Below here, you'd want to see volume. You'd want to see the 534, the Elliott oscillators start to kick higher. You'd want to see the RSI at least above 50 start to trend. Don't just assume because we got this that it's off to the moon. All right, profit taking, a little softness. Choose carefully in here. All right, it's always vulnerable after you get one of those big kicks, right? And you leave an air pocket. Right. As always, right? Then choose wisely. Okay, guys, there you go. I'll be back with the S&P in just a bit.